Vinati Organics suffers crash in prices on margin fears and a weak guidance. In existence for over 3 decades, 2 manufacturing centers in Maharashtra into specialty chemicals and organic intermediates. Vinati Organics stands out as the largest global manufacturer of IBB used in manufacture of industrial ibuprofen. It is second largest in manufacture of ATBS, products used widely in pharma, oil drilling, personal care and paper, export revenue 2/3. Enjoys a strong competitive edge in both its major products in the form of manufacturing processes and cost economies quite difficult to replicate. Vinati Organics comfortably placed in sourcing raw materials both locally and from abroad, and its contracts are on a cost plus basis, protecting from input inflation. Mid-cap with a valuation of over 18,000 crores, 3/4 held by promoters of strong repute. Share of mutual funds and FPIs has remained constant. Retail holds the balance 13.2%. Strong and professional funds management, generation of cash from operations, consistently growing year after year. Working capital under able control, sizable fixed asset investment funded out of internal accruals, debt-free company. After paying regular dividends, company able to generate sizable cash surplus in the latest year of over 200 crores. Solid balance sheet with growing fixed assets, corresponding current assets, and gross assets growing at a 5-year CAGR of 21%. Concurrently, equity has grown over the period at a CAGR of 22%. Equity is funding gross assets to a sizable extent of 87%. Return on equity has remained quite attractive at about 20%. For a period starting from March 2020 to September 2022, the price has grown regularly almost 3 times, being in an ascending channel for a continuous period of 30 months. From its peak level in September 2022, the share suffers a fall and it gets into a descending channel for a period of almost 6 months, reaching end of March a price of 1,716, losing almost a quarter from its peak valuation. Surprisingly, during the period of fall in the descending channel, quarterly performance was quite impressive. Q1 EBITDA grew by 28% year on year. Q2 was better at 47%. Q3 was quite impressive at 76%. Q4 was a bit low, but overall on an annual basis, EBITDA grew by impressive 36%, but still the price fell. Reasons for the fall not evident from revenue, which has delivered a growth of 23%, 5-year CAGR and annual growth of 29%. Similarly, profit after tax had a good show, 5-year CAGR 26%, previous year growth 32%, quite impressive record. But it is EBITDA which reveals the weakness, where largely due to product mix changes, EBITDA percentage has moved from 40% levels to a level closer to 30%, making an erosion of almost 10%. Profitability of Vinati was largely drawn by ATBS, which contributed around half of the revenue and more than that of profits. Its demand globally has stagnated due to destocking at the customer's end, and the gap has been filled up by low margin products from IBB, butyl phenols and antioxidants. And this has impacted the aggregate margins of Vinati, and that is where company has a risk of lower margin for FY23 continuing in FY24. Reasons for the fall apart. On a daily chart for over 12 months, the 52-week high had a PE of 66 in September 22, with 52-week low of 1693 at the current level. Fibonacci retracement is at 21.7 and a discount to 52-week high is at 22%, and interestingly, the current PE is quite closer to 5-year median, and that is quite interesting. Looking at the movement in both ascending and descending channel right from 2020, the thing that stands out is that price has all along moved above the 200 EMA, and that is quite significant. Company is into a diversification project acquiring Viral Additives, an enterprise owned by the promoters for manufacture of antioxidants used in plastics and LDPE, an import substitute and a natural extension of butyl phenols in their forward integration. June 23 is the target date for merger and the cost is 330 crores. Revenue is 700 crores at full capacity. 70% of it is likely to be exports. Notwithstanding the current stagnation of demand, company is going for expanding its capacity from 40,000 tons per annum of ATBS to 60,000 tons per annum, and the project costing 300 crores is likely to be on stream by end of March 2024. Company is quite hopeful of excellent growth both in revenue and margins from FY25. Positives: impressive growth in revenue and profits, debt-free company, strong flowback, global moat. Concerns: product mix driven decline in margin, flat guidance for FY24 and ATBS expansion in spite of stagnation in demand. Hope you found this video on Vinati Organics to your liking. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. You can access similar videos at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. For your valuable time and kind support, highly obliged. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.